Coinbase proved they are serious. They are not joking around. Tens of millions of dollars alarm is definitely something we should pay attention to, especially when it has that major impact on Shiba Inu. But this is just the tip of the iceberg. Something even bigger is coming next. Trust me, you'll be very surprised. But what am I even talking about? Well, let me explain. Disclaimer. Today's news is buzzing with some wild updates. Take, for instance, the recent bombshell dropped by crypto exchange giant Coinbase. They've just disclosed that they've thrown a whopping $25 million towards Fairshake, a super political action committee that's all about crypto. With the US elections right around the corner, Coinbase is gearing up for a fierce lobbying campaign. You see, these elections are stirring up quite the buzz in the crypto realm, and it's not all sunshine and rainbows. There's a storm brewing, especially with big players like Joe Biden taking a swipe at crypto. His recent veto has sent shockwaves through the community, sparking cries of a crypto crackdown. But Coinbase CEO, Brian Armstrong, isn't holding back. He's shouting from the rooftops that crypto voters need to step up. Until politicians get the memo that being anti-crypto is a bad move, they won't take us seriously. It's time to rally behind the pro-crypto candidates and show the door to the naysayers. For the crypto community, this is more than just a political squabble. It's about securing our place in the digital landscape. That $25 million injection from Coinbase? It's a signal that things are about to get real interesting. So buckle up, folks. The coming months are going to be one heck of a ride. But this is not what truly gets me excited today. Today, we begin with a massive discovery. Yesterday, US spot Bitcoin exchange-traded funds recorded their 15th consecutive day of net inflows, adding a whopping $105 million. This streak is quite significant. And yes, we've already seen even longer streaks of inflows before, much longer. But when people started feeling overly euphoric, those inflows stopped and turned into outflows. This shift happened back in April, if you remember. After the inflows turned negative, many thought we wouldn't see any long streaks of inflows again. But here we are, with 15 consecutive days of inflows into Bitcoin ETFs. People are feeling a mix of excitement and cautious optimism. Some are hopeful that this trend signals a strong future for the crypto space, while others are wary, remembering how quickly things can change. Overall, there's a buzz of positive energy, but with a touch of caution, as everyone watches to see if this streak will continue or if history will repeat itself. This should have a huge impact on Shiba Inu very soon, and all because of one little detail. We'll get to that later. But today also brought another major discovery. Bitcoin long-term holders have resumed accumulating for the first time since December. While Bitcoin ETF inflows are undeniably a positive development, some might argue that this is just new traditional investors entering the crypto space, and there's nothing to be overly excited about. To some, this perspective makes sense. They see it as traditional investors simply diversifying their portfolios rather than showing true belief in the transformative potential of cryptocurrencies. From this viewpoint, it's more about financial strategy than a genuine endorsement of the crypto movement. But now, with original Bitcoin holders returning, the excitement cannot be denied. The last time they were actively accumulating was in December. Interestingly, this was exactly the time when people were gearing up for a Bitcoin ETF approval. This event made huge waves across the world, and these seasoned players were busy accumulating as much Bitcoin as possible while it was still relatively cheap. They understood that a Bitcoin ETF would unlock doors to billions of dollars in inflows. And they were right. After the Bitcoin ETF approval, literally billions of dollars flowed into Bitcoin, significantly impacting its price. In just 2 months, Bitcoin soared to new all-time highs, surpassing $70,000. So it seems these old whales were right, and their strategic bet paid off handsomely. And now, it looks like they're back and have begun accumulating again. Some argue this is because of the recently approved Ethereum ETF, with trading anticipated to begin this month. Others believe it's because Bitcoin is stirring once more, fueled by its 15 days of inflows into Bitcoin ETF. Both sides make sense. The Ethereum ETF approval could indeed be attracting attention and investment, while the renewed interest in Bitcoin could be a sign of a broader market awakening. However, regardless of which perspective is correct, one thing is crystal clear. The crypto whales are bullish. Their return to accumulating suggests a confidence in the market's future direction, and investors are keeping a close eye on their moves as they navigate these exciting developments in the crypto space. So, what's actually going on behind the scenes? Well, first we need to take a look at on-chain data. According to the latest Bitfinex Alpha report, Bitcoin long-term holders have shifted gears, signaling a change in market dynamics. Bitfinex analysts note that the selling pressure from these investors has eased, with a noticeable increase in buying activity. And here's something very important. The reserves of Bitcoin on exchanges have sharply declined since February, contributing to the recent price rally and potentially setting the stage for another surge in value. But now you might ask, why am I talking about Bitcoin? What does it have to do with Shiba Inu? Well, as I've mentioned in my past videos, Shiba Inu is hypersensitive to any Bitcoin movements. However, lately, skepticism has been on the rise, and folks are seeking more concrete evidence. So, here we go. When the overall market, especially the Bitcoin, is on the rise, Shiba Inu tends to follow suit with its own price increases. However, when the market takes a dip, Shiba Inu often sees significant declines as well. This pattern has been consistent throughout this year, especially evident in late April. For instance, when Bitcoin experienced a 15% drop from its high of $66,000 on April 23rd to a low of $56,000 on May 1st, it marked Bitcoin's lowest price in 3 months. Interestingly, Shiba Inu mirrored this movement, plummeting on April 23rd to a new low on May 1st. That's a hefty 23.5% drop within the same time frame that Bitcoin faced similar downward pressure. This synchronized movement in price between Shiba Inu and Bitcoin highlights their strong correlation. When Bitcoin sneezes, Shiba Inu tends to catch a cold, reflecting the interconnectedness of these cryptocurrencies in the market ecosystem. According to market data from Into the Block, Shiba Inu has shown a 79% correlation with Bitcoin over the last 30 days. This means that Shiba Inu's price movements have closely mirrored those of Bitcoin, showing a strong positive correlation. And now, 79% might seem like just a number, but in the world of statistics, it's actually quite significant. A correlation of 79% indicates a very strong relationship between the price movements of Shiba Inu and Bitcoin. Essentially, when Bitcoin goes up or down, there's a high likelihood that Shiba Inu will follow suit in a similar direction about 79% of the time. This level of correlation highlights just how closely intertwined the two cryptocurrencies are in terms of market behavior. And now, getting back to the current Bitcoin bull frenzy, here's something very interesting. If the 15 consecutive days of inflows haven't caught your attention yet, then what I'm about to reveal might just do the trick. BlackRock and Fidelity's Bitcoin ETFs have played a major role in their overall ETF inflows this year. To put it into perspective, these Bitcoin ETFs have contributed to 26% and 56% of the total inflows for BlackRock and Fidelity respectively, as highlighted by Bloomberg ETF analyst Eric Balchunas, referencing data from Bloomberg Intelligence. Since their launch nearly 5 months ago, BlackRock's iShares Bitcoin Trust and Fidelity's Wise Origin Bitcoin Fund have collectively attracted $16.6 billion and $8.9 billion in inflows, according to Farside investor data. And well, when you consider that BlackRock currently lists 429 ETFs and Fidelity lists 70 ETFs, having Bitcoin ETFs account for 26% and 56% of their total inflows respectively is crazy. It shows just how much attention and investment these institutions are directing towards Bitcoin, considering the wide array of investment options they offer. So, with the renewed optimism from old Bitcoin holders diving back into the market and the anticipation surrounding the upcoming US presidential election, it seems like we could be standing on the edge of a potential bull run. Not financial advice. But what is your opinion on that? Comment down below. I'd be eager to read your opinion. If you are curious to find more, then make sure to click on one of the videos you see on screen. And with that, we come to the end of this video. If you enjoyed the video, then please like this video and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video to as many people as possible. Let's get this news out there.